Today is December 2nd, 2023. It's almost 11 p.m. New York time. So what we're going to do today is our first monthly review. So here's the watch list that we could put together at the beginning of the month when I started the channel. And this is basically for us to keep track on things that we'd like to keep track on. I separated it by indexes. We started by building a list with entering the values that we had at the beginning of the month of November. And here was the first trading day to figure out year-to-date change. For stocks, we have a little bit of different picture because I noticed that when we were hitting the lows, which was the last day of October, there were actually some stocks that were near or making all-time highs. And this is the middle of November 11th. Right here when we updated the numbers, Nvidia was making all-time high, Microsoft was making all-time high, and Apple was sitting near all-time highs, while Tesla was down 68% and Amazon was down 30%. This is our beginning watch list. So what I did today, I cleaned up this spreadsheet and I actually updated it for current values. So let's just go right from the top. Up here, you'll see the numbers 1, 2, 3, 4, 5, 6, 7. So we have 7 rows, and when I am referring to a row, I will just try to highlight it and call out the numbers. So number 1, the name of our indexes. Number 2, we have the values for each index at end of November, or we can say first day of December. Here are the values that they traded at on November 1st. And column number 4 shows numbers that indexes entered this year. The first trading day for the year was January 3rd. Here we have the change for the month, and here it's updated for the change year to date. So looking at this, first of all, let's go to column number 5 and look at performance. What's surprising is that Russell was the strongest on the month, up 12%, followed by NASDAQ, S&P, and the Dow. Let's look at what we have here. So looking at column number 5, all indexes are up. The segment of the year, Russell 2000, is actually up more than any other index for November. But if we look at the year-to-date change, NASDAQ is still leading, up 45%, S&P is up 19%, the Dow is up 9%. If we look at the column number 7, this was our middle of the month review, and I noticed that when the indexes were sitting at their low, column number 7 is from our November 11th video. And here what I did was I went ahead and I looked at how far the indexes are sitting from their all-time high, because even though a lot of stocks were hitting lows for the year, some indexes were sitting not only close to their 52-week high, they were also sitting close to their all-time high. And the Dow was only 4% off, followed by NASDAQ and S&P 500. And now if we look at the performance from all-time highs, our segment Russell is the furthest away. They need to make an adjustment. Opening price for Russell was 1842 here and 1842 buy. And as we can see, Russell finally went positive for the year this last week. And here's what it looks like on daily. Wow, the last refuge for the bears has been raided. If you look at how it traded this year, look at this low, and then we have another lower low, and then we have another major lower low. Now compare this with the Dow, and we exploded. Here we had a pullback, looks a lot better than the Dow, because look at that, when we had only one little pullback right here, we had a much bigger and longer lasting pullback on the Russell. So the bears are hurting everywhere. In November alone, the weakest index out of them all is up almost 14%. It's short covering, short covering, short covering, short covering, short covering. Now let's take a look at our stock. We're going to go into column number 5. This is our November. All of them except Google are up double digits. And if we had a year like we had November, it would be considered a really good year. Switching to column number 6, we are up 200% plus on Nvidia, more than 100% on Tesla, and all others are up double digits, with Apple being, I don't know if I can call it that, but the weakest stock in our watch list is up 46% on the year, which is a phenomenal year, and we're approaching all-time highs. It will be a really green Christmas for money managers. They waited exactly 2 years for the market to come back here, and the bonuses on Wall Street this year will be humongous. Now we have a really good idea on what happened in terms of percentages with both our stocks and our indexes. And now we can go and take a look at our pictures. Okay, NASDAQ, let's go back down to weekly so you can get a better view. And we can even go to daily and see what this month looks like. It's been a pretty brutal month for all the shorts that are suffering greatly. This part here, as we looked before, it was a huge bear trap because NASDAQ made right here, you can see here's the low, August 18th. And then we made another low on September 27th. And then on October the the 26th, we made a lower low, trapping a lot of bears in here, and we opened in November and we never looked back. If you look at this month, here is one red candle, 150 points down and 1,900. This is what short covering looks like. Once we closed above this top, shorts got really nervous, and here we had some numbers released. But if you look at the move, you can tell that the move started way before the numbers released. Here on this day, you turned on the television, all the smart people told you why we're going up, but the move was over. And let's just show you what I mean by that. Here is the beginning of the month. Here is the move up before the numbers release, and here's the move up after the numbers release. So you can see for yourself, by the time the news makes it to the television and news wires, it's not news anymore. It's been priced in and the trade is over. And if you look at it after this gap, we really didn't go up that much. It's only 1%, and that's November 14th. So the move was pretty much finished in the middle of the month. And the only way you can catch this or spot this or even get this on your radar is if you keep a watch list with indexes and stocks and you try to get an idea on what's going on. So let's just go back and continue looking at our chart. On the Dow, we have even better picture. Here is a low, here is a lower low, and here is another lower low. That's where the bears got trapped. We opened first day of November. We took off. There was a major level, and if you can see, we made a little pause in here. This was last hope of the bears to push it down. They couldn't do it. We come in Tuesday, November 14th. Numbers released. We gap up and we continue on the move. And there was no mercy for the shorts. They're all getting slaughtered, covering on the way up. This is really brutal. And one of the things that we talked about before is knowing what your mega trend is. Here, if we zoom out and put a trend line, we can clearly see that we're in the mega uptrend. It's been going on for years. Just take a number. Here we are. We're up 250% in the past 10 years. And by looking at this chart, you can clearly tell that this market is going up quite a long time. We had few pullbacks, major one being the beginning of the Russian invasion of Ukraine. February 2022, the market sold off 21% until September 22. Then we reversed, made back almost all we lost. And this last sell-off here was not even on the big, but the way we're going up, it shows that a lot of people got short and a lot of shorts hurting now. This is a terrible month and a really bad year for the bears. Any sane person will ask who is shorting this market. The answer is that we had a lot of issues. There was a lot of negative news. So many things going on around the world. The market climbed the wall of worry and it set up bears right here. Now, once we're done with the indexes, we can go and take a look at our stocks. I'm going to do it in alphabetical order. Apple is at its 52-week high, well on its way to its all-time high, and the stock is sitting less than 3% from its all-time high. Google, take a look at a longer picture. See the highest back in November 2021. It is the weakest stock on our watch list, and it's not looking anything like Apple. Here's the picture. Apple, weekly green bar, green bar, green bar, 1, 2, 3, 4 weeks daily. Goes up, consolidating, getting ready for a move up. And look at Google, goes up and sells off, minus 5%. And on the daily, we can see that it is actually quite far from its all-time high. Let's take a look at the longer time frame. I think it's just running into a little resistance here, right here. We take that resistance area and we extend it across. We can tell that in here before. And the significance of this area is that it actually lost 40% of its value last time it was here. So what professional traders are looking at and thinking is that came here one time, it sold off so much. Other orders and liquidity that was there a while back, they can do the same thing to this stock. And if we look at the first time that we made it back up here in October, we sold off about 14%. It's not as much as before, but we sold off. So it doesn't look like there are orders like they were last time. It looks like some people are either taking profits or anticipating that the orders will come in, but it does not look like it looked back in March of 2022. So with Google, we just let it be here, let it consolidate and see what it wants to do. If the market is strong, sometimes laggers catch up, sometimes they become leaders. We never know. All we know is that Google is in uptrend and it's sitting 12% away from its all-time high and it's near its 52-week high. So here's an uptrend. We just leave it as is and make a note that Google continues being the weakest out of them all, and we just wait and see. Next up is Microsoft, our leader. It's been going up at a really steep rate, and if we zoom out and we take a look at the picture on the weekly, we can tell that this rally for Microsoft is in place this whole year with only one pullback, and I'll go from the very highs to the very low, 16%, new highs again, more than 50% on the year. Next up is NVIDIA, our champion in the artificial intelligence chip industry. The demand has been huge from the beginning of the year until August. It was on the tear, up 230+%, making its high, and And one thing that I mentioned in my previous video is that you do not want to buy NVIDIA when it makes it all-time highs, because it has a tendency to pull back. Here's a little 1%, 10%, 16, we make another all-time high here, and that's 17%. We are here, maybe we'll pull back here, maybe not. But again, when it made its all-time high, just made a warning last time. If it happened before, it will happen again. It's the character of the stock. There's nothing wrong with it. Every time it makes its all-time high, it sells off, and then it makes another all-time high. People who chase stocks, they always have to sit through this pain, 9%, 10%, 15%. But now, the stock has a tendency to pull back. It's pulling back. There's no need to be fearful. You just watch it and find a good spot to get in if you want. You just watch it and you'll see that, like a rubber band. It makes a high, somebody pulls it back, boom, releases it, and it goes to its all-time highs. Being a leader and being such a huge performer is probably top stock or NASDAQ. Every fund manager, every portfolio manager who is managing technology must have this thing in his portfolio. Otherwise, they have a lot of explaining to do. We wait and see. But in any case, NVIDIA is having a phenomenal year.